All right, hi everyone. In this video, we're going to talk about Nvidia's Q2 earnings results. We'll take a look at the financial development of the business, which has been outright spectacular. We'll then discuss some of the key highlights from their press release. We'll talk about guidance, and of course, we have to talk about the valuation relative to the price of Nvidia stock. So if that is something you are interested in, make sure to stick around. All right, so let's start with a basic overview. So right now, Nvidia is trading in the range of around $460 to $470 a share. And in the intro, I've already highlighted that their financial performance has been very, very good. But interestingly, the stock didn't really move significantly after the earnings release, which kind of gives you an idea of what is already priced into the stock. And we'll, of course, talk about this today in this video. So as I said, we're in the range of $460 to $70 a share. If we take a look at the development of the share price over the last year, the 52-week high and the 52-week low, we can already see that Nvidia has been like one of the best performing stocks of this year, and I think it might very well be the best performing US stock at least. And if we just take a look at the differential here between 52-week high and 52-week low, I think this is kind of already proving that markets are not efficient. So what does Nvidia actually do? So Nvidia provides graphics and computer networking solutions in the United States, Taiwan, China, and internationally. And obviously the company is operating in the semiconductors industry. Right now, Nvidia trades at a market capitalization of more than $1 trillion, $1.1 trillion to be more specific. The enterprise value is pretty much the same as the market cap, so no significant debt or cash position at Nvidia. That's what we see on the right-hand side here on this particular slide. Nvidia employs 26,000 employees. Revenue is $32 billion over the last 12 months. And Nvidia does pay a dividend, but it's not really significant in the greater scheme of things. Moving on to the financials. So I guess that's one of the most interesting parts of this video. Maybe just as a little reminder, when a company releases its quarterly results, you will basically see everywhere comments on whether the company has beat or missed some of the analyst expectations. So before we get into the financials, I just want to be very clear. In this new format, I'm never going to be talking about whether a company has beaten or missed analyst expectations. Of course, I think this piece of information is completely irrelevant. It would only be relevant if you would assume that analysts could actually fairly accurately value businesses. But I don't think that's the case. Analysts have flawed incentive structures in place, especially the sell-side analysts. And that's just something I'm going to include in every single one of my videos. So if we take a look at revenue, we can see that, as I said, Nvidia is doing spectacularly well. Revenue grew more than 100% year over year, and quarter on quarter also 87%. The revenue over the last 12 months, I think I said that before, is now sitting at $32.7 billion US dollars. And in the last quarter alone, Nvidia generated revenues of $13.5 billion US dollars. I included this tweet here because it shows how insanely well Nvidia has developed on a fundamental level. And if we look at the development of revenue over the last, 15 years, it should come as no surprise why Nvidia has been one of the best performing stocks over that specific time period. Moving on to operating income. So operating income also saw explosive growth, growing 1,263% year over year and quarter over quarter 218%. Then we've got free cash flow, a metric I place probably the most emphasis on, which grew 623% year over year and quarter over quarter 128%. It's now sitting at $10.3 billion US dollars, but to be fair, that is not including stock-based compensation yet. On this slide here, we can see the free cash flow generated by Nvidia relative to the stock-based compensation expense Nvidia incurred over the course of the last 7 fiscal years. And we can see in 2023, 2023 or 2022, their 2022 fiscal year, stock-based compensation actually represented 71% of the total free cash flow generated by the company. So it's very significant. And when we talk about valuation in a second, obviously I do factor in stock-based compensation because I think it's a very real expense for the vast majority of companies. However, even though stock-based compensation is so significant at Nvidia, we can see that the number of shares outstanding has actually developed quite nicely, I would say, over the last few years. I mean, at least it's going down, and there's no significant dilution of the already existing shares. As a result, the development of earnings per share also has been quite nice over the last couple of years. Then we are almost done with the financials. Let's look at the margin profile. Here we can see the gross margin, the free cash flow margin, and the operating margin. And we can see, what I really like to see here is that the gross margin is, first of all, fairly high, sitting somewhere between 60 and 70%. In fact, we have now reached peak gross margins. Maybe those are some scale effects that are kicking in. Maybe it's just kind of a peak margin where we will see gross margin normalize over the next couple of quarters, going back to the 65% range. But second of all, what I like to see here is that the gross margin is actually fairly stable. As I said, it's fairly high and stable, and I think this reflects the pricing power of Nvidia. In terms of free cash flow and operating margin, we can see that both the margins are very high. So certainly something investors will also like to see. We're pretty much in the range of 20 to up to 40%. In the most recent quarter, we saw operating margins of 50%, which is pretty insane, and free cash flow margin, which is not excluding stock-based compensation, I should say, reached also 45%. So very, very impressive in my opinion. Then in terms of business efficiency, return on equity, which you can see on the left, and return on capital also are sitting at very nice values, are certainly above Nvidia's cost of capital and certainly much higher than my opportunity cost. What I'm trying to say, it's much higher than my hurdle rate when I look for attractive investments. So apparently Nvidia can reinvest profits at very attractive rates, higher rates than the average investor will be able to find in broader stock markets. Okay, if we now move on to the highlights of Nvidia's Q2 earnings results, one key quote from Nvidia CEO Jensen Huang is that basically a new computing era has begun. Obviously, with the arrival, at least in the mainstream media, of artificial intelligence, Nvidia is one of the main beneficiaries, and obviously the total addressable market of Nvidia with its chips has increased over the last year, or the last couple of years, I should say, and there's certainly a lot of runway for growth left for Nvidia. Another highlight for me during this call was that a new buyback program was announced. We just talked about the development of the total shares outstanding, which is pretty much flat over the last couple of years. And with this new 25 billion buyback program, I think investors can expect that going forward there will also be no meaningful dilution. Quickly talking about guidance. This was probably another big surprise during Nvidia's call. Basically, they were guiding for $16 billion of revenue in the next quarter, which is significant because it is much higher than what was expected. So I highlighted it in red at the bottom. It's $3.5 billion more than anticipated. And if you just analyze that, that's 14 billion more in revenue than originally anticipated. And if you assume 50% operating income margins, that translates to $7 billion in operating income. That was not expected so far. However, when we talk about guidance, we can already see that quarter-on-quarter growth is already slowing a little bit. Of course, we are comparing the guidance figure to a very, very impressive quarter. But growth is slowing to just 18.3%. 5%, and we will get to the valuation in just a second. And a growth of 18.5%, I think I can already spoil that, is not going to be enough to justify Nvidia's current price. Also on this slide here, I just showed what analysts expect in terms of Nvidia's revenue growth going forward. So over the next couple of years, they expect growth to be in the range of 20 to 30%, but over time it's going to be slowing a little bit. And yeah, as I said, we'll get to valuation just now. All right, so in the beginning of the video, I showed a slide which showed that I don't want you to place too much emphasis on whether a company was able to beat its guidance or analyst expectations, or whether those estimates were missed. Similarly, in each of my videos that kind of follows this particular format, I'm going to include a reminder that the result in any given quarter is of course important, but in the greater scheme of things for long-term investors, and if you think about it in like the quarterly performance in the context of intrinsic value, it's not as meaningful as you might think. So with that being said, let's start by looking at the multiples of Nvidia. So the last 12-month multiples are an enterprise value to sales multiple of 34.6. We've got an EV to operating income multiple of 105, an EV to free cash flow multiple of 110, and a price to earnings multiple of 111. And obviously, that's not cheap, like not cheap at all. Nvidia, I think you're all very aware of that, is a very, very richly valued, which of course has an impact on expected returns going forward. On the next 12-month basis, however, Nvidia is still very expensive, no doubt about that, but I think the numbers look much more reasonable. So we've got enterprise value to sales of 15.8x, we've got enterprise value to operating income of 26.3, and basically on a next 12-month basis, Nvidia is quote-unquote only trading at 32 times, or 33 if you round it up, its free cash flow. Yeah, and I included this tweet here from Thomas Juror, which kind of stresses what I've said before. I think basically none of the other big tech companies is growing at a rate as Nvidia is, and the results are absolutely spectacular. The question is, however, is this performance already priced in, or is there more upside left in Nvidia stock? You can of course share your thoughts in the comments down below. If we now take a look at the discounted cash flow analysis, I have run a reverse DCF, basically trying to figure out what I think is already priced into the stock. And what I've done is I've looked at the last 12 months of free cash flow. I have subtracted the stock-based compensation expense, which gave me free cash flow of 7.26 billion. And I just want to stress again, I think I prepared a slide for that, and that this number is already assuming peak margins. So I don't think if I use around 7 billion in free cash flow, that's a conservative estimate. But I want to give Nvidia the benefit of the doubt, and that's why I used this particular figure. Now, to justify a share price of $460, basically Nvidia has to grow its free cash flow over the next 5 years at a rate of 45%, and then between year 6 and 10 at a rate of 26%. I assumed a terminal growth rate of 3% and a discount rate of 10%. However, now our fair value estimate is $461 per share. We are not, however, including a margin of safety. And personally, I only want to buy companies if they are available at a significant margin of safety. Usually I demand a margin of safety of 50%. So to arrive at $461 per share, or let's say around $460 a share with a 50% margin of safety, Nvidia has to do even better. So what I had to assume was growth of 60% between year 1 and 5, 32% between year 6 and 10. And then I arrived at a fair value estimate of $916, which would then allow me to buy Nvidia's stock at a significant margin of safety price today. Just to stress how realistic those growth rates are, I included this particular table from Chris Meyer's book 100 Bagger. It basically shows how few companies can actually sustain revenue growth of 20% over multiple years. The numbers very quickly decline very rapidly, and I think it kind of shows already that assuming that Nvidia can actually achieve the growth rates that I had to input into my DCF is very, very unlikely. And this is also something that was stressed by this tweet here that I also decided to include in my presentation. So basically the sentiment after the Nvidia Q2 call was that, yeah, we've never seen such spectacular growth before, especially at such a big company. However, the Twitter user StockGeek pointed out that, of course, we've seen that before. He was referring to Cisco, which tripled its revenue between 1997 and 2000 from 6.4 billion to 19 billion, basically in the era of the internet boom. And of course, the stock of Cisco soared. It was one of the internet darlings of the .com era. However, as we can see in the stock price chart in the bottom left, basically Cisco never really recovered. So it took like more than a decade for the stock to recover. Of course, eventually the investor sentiment changed. On the right, you can see that the business Cisco itself actually developed quite favorably, but due to multiple compression, the stock had a very rough time, basically ever since the .com bubble. So what are my final thoughts? I think I've prepared a couple of more slides. First of all, there is no doubt that the business performance is incredible. Like Nvidia is doing particularly well. However, I have my doubt whether Nvidia can keep up at this pace. Obviously, in this particular video, I didn't talk about Nvidia's business a whole lot, but let me just say that Nvidia has no significant recurring revenue streams, which makes it a rather cyclical business. I mean, the semiconductor industry is known to be super cyclical. We might be at peak margins, so if I had to bet, I think we are going to see declining margins at some point in the coming years, and I think the stock is very much priced for perfection. And when I look to find attractive investment opportunities, I only want to invest in stocks that I think are an obviously attractive investment, and that's absolutely not the case with Nvidia here. Of course, the company might do well, and the stock might even do well too. I really don't know, but it's just not something I want to be involved in, because I think the downside risk to upside relationship is not looking very favorably to investors. Now on this slide here, and I think I've actually prepared another one exactly, these two tweets basically highlight that the investor sentiment is very bullish, and that is actually something that scares me. Like this Twitter user, for example, wrote or tweeted that he thinks Nvidia is a quote-unquote must-own stock now. I think that is basically a very strong indicator that you do not want to own that particular stock. And then, of course, to wrap it up, we've got the contra indicator itself, Jim Cramer, who also thinks you should continue to own Nvidia, which might be a good indicator that it's now time to sell. Now, I want to wrap it up with this video right here. Just very quickly, I want to point out that I'm looking for people that want to be mentored by me. So if that is something you would be interested in, feel free to reach out to me through either my social media channels or via the email that I have put in the comments down below. Yeah, and that's it for today. I hope you have a great day, and I see you in one of my next videos.